Okay, it's currently February 10th. This is market dissection class for February 9th. It's the Friday of that week. It's the week after NFP. So looking at the daily time frame, I'm looking at the NFP candle, and we talk about how the NFP candle holds a great deal of significance in this setup. So I'm paying attention to this daily candle to see whether the low or the high can break and the direction that price will be wanting to drive into after it breaks. So I understand that if it does break the low, then I have further sell side down here. And if it breaks the high, we have buy side to take out over here. So we see on Wednesday, February 7th, we have broken out from the high. Thursday, February 8th, retested the structure and printed a doji candle. Might look like a weak candle, but I know that if I come in on Friday and the high has been taken out, then it's going to be a full-blown long all day on Friday. So giving me indication to come in and anticipate longs. So when I come into session and I have the 5 minute time frame at 5:30 making its push up with the news, I know that there's buy side up here. Just looking at the 5 minute time frame, I could tell that we have sell side in this area, we have sell side in here, we have sell side in here. So I'm going to drop down to a lower time frame and we're going to be dissecting how price played out off of the 1 minute time frame in this area. Going down to the 1 minute time frame, I'm going to put back on my analysis. So I could see that, all right, we have the 20% of the week lining up over here, the 30% of the week lining up over here, meaning weekly low all the way to the weekly high. And then this is our opening range gap using regular trading hours. So I want to see, okay, if sell side is here, then how far deep do they want to drag this thing? Do they want to fill this in before heading on up? Or how do they want to set this up once sell side is taken down here and created enough liquidity from this entire range run up to be able to have another push up? So I'm gonna play it all out so you can see what happens. So this is currently 6:27. And I'm waiting to see how the 1 minute candles are gonna print for market open. So 3 more candles, 6:28, 6:29, 6:30. So this is market open. I see that there is a nice push down and I know it's targeting sell side. So I wait a little bit longer for this to play out. We still have equal lows down here, meaning that it's gonna have a push down. So if this candle pushes up and it's wanting to take this area, then I want to go short up in here. I'm gonna just add one contract over here, put my stop loss up here above the market open high, in order to be able to take out sell side. So I'll give it one more candle. And I see that it has a nice drop down after, hang on a second. After hitting market open candle, but it cannot break out of the candle, so I'm going to add a few more in here. And the stop loss is still the same stop loss. I could drag it down just a little bit more. I know that this is the take profit. This is gonna be hit, so I'm anticipating for this to get taken out. And we see that the next candle broke through. So we've taken sell side now. We've locked in a little bit of profit early on in the morning. It's 6:34, 6:35, 6:36. Inside of here, I have a fair value gap created inside these candles. So I pull from high to low fib. And I see the 50% is lining up with this area right here. So I just wait a little bit just to see how they're going to play this out. If they're going to want to tap down into this area, because it is still very early in the day and I know that today is going to be a long setup. It's not going to be a short. So 640, 641, it keeps going on. And I see that this candle now has broken out. So if this candle right here, the high got taken, then this thing is indication that it's ready to flip structure. Now, if we could break out of this area, it's going to be a complete shift in structure. But since we broke out very strong on this candle, I'm not anticipating a return back to this FVG or the 50%. Potentially making it up to the top of the FVG, but we're not going to drive back down into the bottom of the FVG because this range right here is a balanced range. So I'm going to give it a few more candles. And I see that this candle tapped down, hit it, and moved up. So I give it one more second. I see that it's breaking out, but it's holding. So we've confirmed that we want to go long by taking out the market open candle. So more people are going short in here from a retail aspect of things. I want to give it a few more minutes so I get another up close candle, and then I get a nice down close candle, but it's still looking very bullish. So we've tapped off of the 30%. You could have entered on this candle when it was down here. I'm going to give it two more candles. So there's another candle dragged down. So if the next candle cannot paint a full-blown bear candle and it paints a smaller bear candle, indicating that we're holding this wick and we're holding this FEG to go long off of the 70% of the structure, then that'll be my long entry. So I see that this candle closed weak bear, meaning that this is a bear candle, but this is a bull candle. This gives me confidence to put on the full position of the day. So I'm going to put on 6 contracts at this level. And I'm going to be putting my stop right below the 50%. There's no reason for us to return to 50% because this next candle should just take off to the upside after tapping down into the 70% once again and taking out this low. So on a lower time frame, we're currently looking at the 1 minute on a 15-second time frame. This low is going to be a liquidity grab off of this low. So there's a lot going on in this area. We're showing a lot of signs of bullishness. And from here on out, we should accelerate. Well, what do we have on the upside? We have the second standard deviation of market open range, buy side up here, FEG left behind in price, and we have this wick up here to target, which is 5:30 a.m. highs, and above that we have the third standard deviation. So all of these things are just noted on my screen, and I'm waiting to see how price is going to play out after this level. So I'm going to give it a few more candles. So I see that, okay, we've broken out of this area. So it's approaching the second standard deviation. Now, when we hit the second standard deviation, I will take a smaller position. I will take a position off. At this stage, I've locked in my profits on the day. So we have everything locked in. I'm going to give it one more candle. So I got to take a partial here. So I'm going to close out one contract. So we've locked in a little bit more profit. Now, if we take this level, I'll take off another 3. So I'm going to play it out a little bit longer. First retracement leg, left leg, right leg, holding the structure. Still very early in the day. We're only about 35 minutes into market open. So I'm just being really patient with it, letting it do its thing. Climb up in my direction. I see equal highs were created over here. This structure is being held. The OB candle is being held by these bullish candles in these areas. So this thing should accelerate, take out buy side. So this candle took out buy side. So now that we've taken buy side, I need to lock in a bit more of my profit. I'm up $6,000 currently on this position, so I need to lock in a little bit. So I said I'll take off 3. So 3 is coming off right there. And then if we hit the third standard deviation, I'll take off 1 more. So I allow it to play out a little bit longer, and the third standard deviation gets taken. So once the third standard deviation gets taken, I take off 1 more. And I allow price to do its thing to reach for the fourth standard deviation. So let it play out a little bit. All right, now looking at the 5-minute time frame in this area, I can see, okay, we had a retracement, we've had another push up. If we get another push up in this area and we start to have a drop down, then I'll start looking to close out my last position and just waiting for timing to re-enter the position. It's currently 8:05. So if 9 a.m. can show me some sort of sign that it wants to continue in the direction of price, then I can add back my position. But I've already locked in a total of 100 handles. So I just want to let price do its thing. So if we have a drop down, boom, that's my drop down. If the next candle paints bear, one more candle because that wick didn't get taken. So I'm going to be closing out this last position right here. So it's 8:25. I've closed out on the day. I'm just waiting to see how price is going to play in this area. So I'm going to give it a few more candles. So this is 8:35, 8:40. I could see on the 1 minute, on the 5-minute time frame in this area, an FEG is created. On the 1 minute time frame, an FEG is created in here. So I'm going to give it a few more seconds here. So it's currently 8:54, 6 minutes before lunch hour. So I see 8:56, 8:57, 8, 9 a.m. 9 a.m. is having a push down. If 9 a.m. is having a push down, then I know that it wants to target this FEG and potentially sell side down here. So I want to allow this FEG that we've broken out of to be used as a inversion to go short, take out this level and the level down here. So I give it a little bit of time here. Still hasn't taken that spot. I can see that, okay, in this area right here, it's probably going to have a drop down to take out that level. And I know that, okay, there was a wick, drop down. We had another wick, lower than that wick, drop down. Pushed up, took both those wicks, created a new 5-minute candle, right here, that took that level out. And then now, if this thing can drop to this level and take this, it's going to be good to go. So I've already locked in profit on the day. I'm going to put on a small sell position right here. My stop is going to go above here. And I'm going to allow this to play out, see how it ends up. So we've tapped down into that level. So on the 5-minute time frame, candles are looking like this. Long wicks to the downside. We've taken liquidity. This thing dropped down. It's currently 9:15. We know the second half of lunch hour is usually a reversal. So if the second half of lunch hour is going to be a reversal and we've taken out sell side on the first half of lunch hour, then the second half of lunch hour is going to go for buy side up here. So if that's the case, and on the 15-minute time frame, I have a fair value gap in this area that we just tapped into once again. So all of this being noted, I closed down my position. All of this being noted, you would take your profit right here. And if I get another candle reversal over here, then it'll be a long entry to go target buy side. Now from these areas, let's say off of this high up to this level is going to be around 20 handles. But NASDAQ is also now starting to carry S&P on its back in a correlation aspect. And the S&P has a long distance to make until it takes out its buy side. So I know that if NASDAQ can accelerate from these levels up into new highs, then S&P is going to start targeting its 530 wick on the left-hand side. So what I do is I let it play out a little bit longer. Let it play out. and I see this structure right here with this candle push up. This right here, I know that, okay, I put my stop right here and just run it to new highs. So I'm up on the day. I'm willing to risk a little bit of what I'm up. I'm gonna put on my position again. So I put on 6, drop the stop. It's gonna be $800 stop. Still gonna end the day positive on the account. And I allow it to play out. So I could see that this candle took out a lot of sellers. So I want to wait to see, okay, if this candle holds this FEG in here and accelerates to the upside, then it's going to be good to go. So give it a few more minutes. Has a hard drop down. I know they took out a lot of people on this candle. This stop can be moved to this level, shouldn't even return back there. It could tap down into this FEG one more time. It's not balanced just yet. Or it could be used as a breakaway and continue on up from here. So I give it a few more seconds and I see that, okay, we've started to push up again. Left leg, right leg, swept the liquidity, the retracement candle of the structure. So I know that left leg didn't, right leg did. If this candle right here can hold, it's good to go. So now my stop loss is going to be in break-even territory, and I'm going to allow it to play out. And I can see that, all right, we're moving up. We have the 4th standard deviation up here. If price makes it to up here, I'll close 50% of my position and leave the rest to run. So I let it do its thing, and we can see that 4th standard deviation was taken with a very strong candle. So now I know that if price comes down, breaks this candle, I'll take off all 6 contracts. If it can't come down and break this candle because of the way this candle exploded, then I know for a fact it's going to be running up the rest of the session, because at this time S&P is still reaching for buy side. So we can take a look at that together. Let me do 2. So on this chart, oh, beautiful. Hold up S&P for me. So this is NASDAQ, and NASDAQ is currently at 652, and you could see, 952, and at 952, S&P is right here, and this box is the highlighted 25 to 50% of the 530 wick on the 15-minute time frame. And I know that it wants to accelerate through that area. So 952 is going to land inside this candle, giving me indication that NASDAQ is going to want to start running up. S&P has this wick to chase, so correlation in the market is telling me to hold my position. So for the time being, I'm going to raise my stop to this level, as I said, to not allow it to pass this candle. And if it continues to run up, it continues to run up. So we see that through all of this, it's all holding the 4th standard deviation, looking really good, accelerating to the upside, having a little bit of retracement, and just moving on up in our direction. So this candle right here, if this candle breaks and takes out the 4th standard deviation, 3 contracts are coming off of this position. If not, I'm going to hold for new highs, because we just created another level that we could chase on the left hand side. So it from here to here is now 12 handles. So if I have 12 handles chase, let it do its thing. Could not break the lows once again. And then it starts to accelerate to the upside. So we have it running up all day. Gotta just let it do its thing. So I'm gonna go to the 5-minute time frame now. This is usually where I flip to the 5-minute, and I'm just relaxing in my room, listening to music, talking to the team. Everyone's already profited on the day. Some people have some positions running on S&P. Some people have positions running on NASDAQ. But these candles that start to drive in our direction are good to go. So I know that it just sort of does its thing from here on out and just continues to push on up. And it's just really nice price action until S&P takes out this high. So S&P took out its high at 1130. On NASDAQ, this is currently 1130. because S&P is taking its high at this stage, I do want to close out a portion of the position. So I'm going to take 3 off over here. And I'll allow the rest to run. I know my stop loss is going to be underneath the 4th standard deviation. If I get a potential reversal on S&P as well as NASDAQ, which occurred at 1150, that's where the rest of the position comes off. So when I see this next push up, you know, it's getting late in the day already. I want to take my partials, leave the runners for the potential new week. So I'll end the day off taking 2 more up here, very late in the day. And now I can just put the stop loss BE, hold this position as a runner. And that's the day. So some people came in, capitalized on the short side with me talking about how that was one of our coaches, Eric's favorite short setup. Push down, market open, drag back up, push down again, take out sell side. And then some people waited for the long setup. They were keeping an eye on this area. The 70% broke, ran up, took out buy side. Everyone knows this is the move of the day. Everyone knows this is going to continue on up after lunch hour. So all good stuff. Congratulations to the team, everyone that participated, everyone that locked in nice profits. I got guys on, you know, first time traders that locked in over 100 handles, guys that made some good money on their live accounts. Some guys passed their funded accounts. So really solid day, nice price action, algorithmic delivery from the marketplace. If you like what you see, please subscribe to the channel. And if you want to join us on the live sessions, the business link is in the description.